So you are preparing for the financial reporting examination, and so the question you need to ask yourself is, what should you be looking out for in the examination, and what are the things you have to focus on to increase your chances of passing the examination? Now, if you're a good student of the financial reporting examination, either you've written the paper before or this is your first time, that is not a problem, but there are key issues that you need to understand as you position yourself to pass the examination. 5 questions will be in the exam hall, and all the 5 questions are compulsory. In other words, you are required to attempt all the 5 questions in the given 3 hours for the examination. However, you are going to be having a 15-minute reading time as well in the exam hall that will allow you to glance through the question even before the bell goes for 3 hours, sitting down to attempt all the questions. So the question you then ask yourself is, what are the areas that I have to optimize on, seeing that there are a lot of things in the syllabus? The good news is that we're going to be having questions coming in from all aspects of the syllabus. We're going to be having a question on consolidation, the IFRSs, the single entity financial statement preparation, evaluation of financial statement or ratio analysis, and then we're going to be having questions on ethics, conceptual framework, and other theory areas coming in the exam hall. So let's take the things one after the other and share some few thoughts on the key areas that you have to focus on. You ready? Let's go. Number 1 is going to be ethical issues. Ethics has become fundamental in the professional qualification syllabus of the Institute of Chartered Accountants Ghana and other professional qualification programs. So there are various other subjects apart from financial reporting that have ethical issues that you have to pay attention to in the syllabus. So the first thing you need to understand is, what are the fundamental code of ethics? Now, we have the 5 fundamental code of ethics. We have integrity, that is being honest and straightforward in all professional dealings. It means that as a professional accountant, you are not supposed to provide misleading financial information. Number 2 is objectivity. The professional accountant is going to make a lot of professional judgment in the preparation and presentation of financial statements. As such, when making those professional judgments, the professional accountant must not allow bias, conflict of interest, or undue influence to affect or impair those professional judgments. The third thing is professional competence and due care. The professional accountant must possess the skills, the experience, and the expertise necessary for whatever engagement being undertaken, and the assignment must be executed in a manner that is expected to meet the international best practice or standards at the end of the day. But then there is confidentiality. As a professional accountant, you must not disclose any information. In other words, the professional accountant should not disclose any information to third parties without prior notice with the entity. However, there are exceptional situations or conditions under which the professional accountant can disclose information with or without the notice or permission from the client entity, and these will include where the entity is engaged in something illegal or something they are not licensed to do. Then we are going to be having another issue relating to the fact that if the item is of a public interest. Now, it is important you understand, because public interest is not, defined anywhere. So before the professional accountant will disclose any such information, the professional accountant must seek legal advice as well as technical advice from the Institute of Chartered Accountants Ghana before going ahead to report the issue. Or the financial accountant is a key witness in a court proceeding. Then, under that circumstance, the professional accountant would have to say everything that must be said without prior notice or permission from the client entity. And then certainly the last one is professional behavior. In carrying out the duties as a professional accountant, you must not allow yourself to be in a position where you will do anything that will bring disgrace, disrepute, or damage or destroy the reputation of you as a professional accountant or the profession as a whole. So that is the idea about the fundamental code of ethics. But then the fundamental code of ethics are not able to be adhered to by professional accountants due to certain events and circumstances. These events and circumstances are what we refer to as the threats to the code of ethics. So we have the self-interest threat, self-review threat, advocacy threat, intimidation threat, and familiarity threat. Now, the self-interest threat arises where the professional accountant has financial or non-financial interest in the entity, the transaction, or the event. So in such cases, what is going to be happening is that the accountants' objectivity and integrity and even confidentiality, it's likely not to be adhered to in relation to the fundamental code of ethics. Then we have the self-review threat. Now listen to the name, review. It is where the professional accountant is required to give an opinion on a report or a piece of work which he was involved in preparation. So for instance, you are the accountant of the company and you have prepared an internal financial statement or a monthly financial statement, presented it to the board, or you were part of the people who prepared it. Then the board gives that back to you and say, check and see if everything is okay. You were involved in the preparation, so your objectivity is going to be influenced, and then your professional due care, the way you are supposed to have reviewed it if you were not involved in it, will be different at the end of the day. Then we have advocacy threat. It arises when the professional accountant promotes a point of view of the client entity to a point that the objectivity of the professional accountant is impaired. So representing the client entity in a bidding process, representing the client entity for a loan agreement, representing the client entity in legal representations, or either providing non-assurance services to the client entity, all these will create advocacy threats which will affect the independence of the professional accountant. Then familiarity threat, like the name suggests, it arises where the professional accountant's personal or business relationship with a client entity at the end of the day in that particular case. In such cases, what is going to be happening is that the professional accountant is going to have his independence impaired at the end of the day.